Hey everyone, and welcome to or welcome back to my channel. We got it. I've already tried it, but let's do a taste test. It's really good. It's like a regular latte, but they added cherry syrup in it. All right, let's put that down. As you can tell by the title of this video, I'm going to be going over some tax debits and credits that you can take advantage of as a first-time home buyer or just a homeowner. This is not my usual form of content. I usually do like tours of some kind, whether it be like a neighborhood or a new construction or a home tour. But before I get into this video, I do have to preface and say that I am not a CPA or tax professional. When you are filing your taxes or taking advantage of these debits or credits, please reach out to a tax professional when doing so. But since tax season is around the corner, I want to make a video for all my viewers so you guys can have some tips and advice on what benefits you could be taking advantage of. The first tax debit that you can take advantage of as a homeowner is your mortgage interest. We all know interest rates are in the low 7s. It's kind of been a tough year for interest rates. However, this is something that you can take advantage of. So when you take out a mortgage, you can have mortgage interest deductions. However, I do know that there are deduction limits when it comes to this. If you are married, you get up to $750,000 in deductions, as opposed to if you are a single person, like a single homeowner, you can take up to $375,000 off in deduction. And the great thing about this is that this is something that you can take advantage of every single year. This leads into number 2, which is your property taxes. Here in Las Vegas, we typically have very low property taxes. However, similar rules apply when it comes to deductions. If you are married, you can write up to $10K in tax deductions, and if you are single, you can write up to $5K in tax deduction. Now going into number 3, not everyone may have this. You may have not taken advantage of this yet, but this is your HELOC or your home equity line of credit interest deductions. And this is where it kind of bleeds into the gray because you can only deduct the interest on the HELOC if you used it for specific home improvements. Again, this one can get a little tricky, so please talk to your CPA to see if you qualify. Now going into number 4, you can write off necessary home improvements if you used it for medical reasons. For example, if you needed to make the doors wider on your home, or needed to get a wheelchair ramp, or you had to add special showers to your property, these are things that the government will help you take advantage of. Now staying in the same lane of home improvements, there is the Residential Energy Efficient Property Credit, which started on January 1st, 2023 and will extend all the way till January 1st, 2033. So this allows homeowners to take advantage or get a credit for any type of energy efficient upgrade, such as solar electric, solar water, geothermal heat pumps, or small wind turbines. Now on to number 6, which is your home office expense. Now, if you work from home or you have a designated area in your house where you work for your business, you may be able to deduct the space for that business. However, this specific space in your home has to be used strictly for your business, and your CPA and tax professional will ask you to kind of like measure the square footage of that room, and you'll be able to make deductions based off of that. For example, like if you own like an alterations business, or you're an agent working from home and you have your own business, you'll be able to write that off. Now leading into number 7, which is one of my favorite ones I get to talk about, which is your private mortgage insurance, or PMI, which everyone hates. It's an additional $100 to $175, $200 added onto your mortgage payment. This is something that you can actually write off. The government lets you take advantage of this. As a realtor, I see this all the time. This is an extra almost $200 that's added to my client's monthly payment. The only way to avoid your private mortgage insurance is if you're putting 20% down. And that's typically very hard for first-time homebuyers because they're not taking the equity from their first asset and putting it into their second home. So now you at least have this to take advantage of. Lastly, number 8, which I am also excited to talk about, is a first-time homebuyer tax credit. First-time homebuyers can qualify for a $10,000 non-refundable income tax credit. This means you will get a $1,500 rebate on your tax bill for the year. However, there are some factors that go into seeing if you are eligible for this. First one is buying a qualified home. Qualifying home is a single-family residential, a townhome, or a condominium. The second factor is if you are a first-time homebuyer, and the third factor being if you moved in the first year of owning or buying the property. when purchasing the property, in your initial offer, you check off that you are going to be owner occupied, which means that you are going to be moving into the property and you're not using it for investment purposes, such as putting other people into the property and you not staying there. Alright guys, thank you so much for watching this video. If you have any questions about real estate here in Las Vegas, Nevada, please don't hesitate to reach out. My name is Michael. I am a real estate professional and I want to help you navigate the home buying process here in Las Vegas. So do not hesitate to reach out. All my information is listed below. And do not forget to like, subscribe, and comment, and I will see you guys in the next video. Bye.